Hi, it's Dennis Rath, and I'm here today with my good friend and mortgage lender, Khash Saghafi.
Thank you, Dennis.
Khash is from Liberty Home Mortgage, and my first introduction to him was several years ago when I had a listing in Berea, Ohio, and he actually called me up before I had to call him up to explain that he was going to be the lender, and if there were any issues, he was going to contact me, and he actually did. He kept that thing on pace, and communication like that from a lender is still unheard of. It's very, very rare. It's no surprise today that buyers are having a hard time finding a house. Some statistic I read a few weeks ago said there could be up to as many as three buyers for every house. Some people think that's a low number. So we want to give you the best information so you can walk away as a winner when you make an offer on a house today. This environment is going to be around for a while based on everything that I'm reading, unless something catastrophic happens. But other than that, I think we're going to be in for this for the next few years. There are four different types of mortgages, basically. You have the VA, FHA.
One, that's two. You're doing good. You're on a roll.
uh,
You're on a roll, Dennis. Keep it up. Can I do that till I have it up?
USDA,
That's three.
and conventional.
Yeah, that's four.
Okay,
There's actually a fifth one I always throw in now. I've changed my thing up to five.
what is it?
I should make you go back and watch the video so you can remember it. Portfolio lending. Portfolio lending.
Okay.
Portfolio lending is when the bank holds they hold the paper, they hold the money. So it's the golden rule. He who has all the gold makes all the rules. So it's the bank's money. They're loaning it. It's their rules. They hold the paper on it. Portfolio. VA, you've got to follow VA guidelines. USDA, we've got to follow USDA guidelines. Conventional, you've got to follow Fannie Freddie guidelines. FHA, you've got to follow FHA guidelines. Portfolio, you make the rules.
See that? So there you are.
But I don't have a vault with money in it, so naturally I don't do portfolio lending. So if I did have a vault with money in it,
You'd be doing
I'd
it.
be on a beach in Hawaii right now, quite honestly. I'd be sleeping. I'd be sleeping.
Okay, first question. How do you know which one to ask for or which one to qualify for? How does that start off?
So ultimately, I call it the process of elimination, okay? I go VA, USDA, FHA conventional, okay? This is the order that I do it in at least, okay? VA, simple question. Have you ever been in the military and do you have eligibility for VA? Now, a lot of people say, Hash, I've never been in the military. Okay, take VA, out the window that sucker goes, okay? Then I go USDA. USDA has location restrictions and income restrictions. So, for example, I mean, of course, we're here in Northeast Ohio. In Cuyahoga County, you can't do a USD anywhere in Cuyahoga County, but you can do USD in all of Ashtabula County, for example. So if I say, where are you buying? And you say, I'm buying in Cleveland, I'll say, okay, take USDA, it joins VA, throw it out the window. Can't do those two then. Now you're down to FHA and conventional. Legitimately, there's always, like, FHA and conventional are pretty similar, and people ask me a lot of times, like, if I qualify for both FHA and conventional, why would I choose one over the other? So I always tell people this, that FHA and conventional are somewhat, they're very similar, okay? FHA is more, in my opinion, geared towards, I hate saying first-time home buyer because I'm not a first-time home buyer, I can't go FHA. FHA stands for the Federal Housing Administration. It's a government agency. It's not first-time home buyer. I have people buying their 10th house going FHA on the loan, okay? But I would say FHA is geared a little more towards people with like a little bit higher debt ratio. You don't necessarily need perfect credit. You don't need to have as much money down. Traditionally, conventional is a 20% down payment, even though conventionals, we get them with 3% down, 5% down, stuff like that. But overall, FHA is geared more towards less down, seller picking up more closing costs, higher debt ratio, less. You don't have to have perfect credit. Conventional, if you don't have perfect credit, you're going to have a hard time getting a conventional loan. Now, again, that doesn't mean, and I hate talking in that vein, because people get so fixated on, here's my credit score. What's the score have to be? Man, if it was just a number, I'd be in Hawaii right now also. I got a lot of different reasons I'm going to end up in Hawaii, okay? One of them is the credit score. If my job was just that easy, it's not just about the score, but if we focus on it, conventional typically, traditionally, is a much higher tier score. The true differences between conventional FHA, let's just pretend you have perfect credit, money down, everything's in line, okay? Which one would you choose? I'll give you 3 reasons why conventional is better than FHA, assuming you're perfect across the board and everything, okay? Conventional. Well, FHA charges something called an upfront mortgage insurance premium. The government charges a fee to insure the mortgage loan such that if you default, the bank gets their money back. Conventional doesn't charge that fee. Now, technically, it's 1.75% of the loan amount. So if I give you a loan for $100,000, that fee is $1,750. They roll it into the loan. So you don't pay it out of your pocket, but when you sign your note on day one, you're going to say, Hesh, I only wanted a loan for 100 grand. Why is the loan for 101,750? And I'm going to say, okay, that's the upfront mortgage insurance premium. So FHA charges that. Conventional doesn't. So naturally, if you qualify, I'd rather go conventional and I have to pay that fee. Second reason is if you put less than 20% down on conventional, you're going to have mortgage insurance. Now, some of the people watching might be saying, I saw an ad where you can go 5% down with no PMI. True, but you're paying it somewhere, okay? I don't want to turn this into a 9-hour talk show, and then you're going to be sitting here saying, Hush, for God's sakes, I brought the guy on to talk for 4 minutes or 10 minutes, and the guy ended up talking for 6 hours, okay? So you're going to pay mortgage insurance one way or another conventional, less than 20% down. But ultimately, for conventional, it comes off of the loan when the loan reaches 78% technically of the value when the loan was given. FHA, you have it for the life of the loan. So the second reason conventional, assuming all things are equal, is better than FHA is because the mortgage insurance is not for life. FHA is. The third reason, and this is probably more in your wheelhouse, is in today's crazy market, sellers are getting 10 offers on their house, and the way that they look at those offers is cash, conventional, FHA, VA, USDA. Whether it's fair or not, I know a lot of veterans probably watching are throwing things at the TV monitor right now, like get rid of this guy. Hey man, I only tell it like it is. I personally think the VA loan is the best loan out there. I love doing them. I just picked up one here in Northeast Ohio. It's a $500,000 purchase. We're going to VA. So that seller accepted VA financing over their other offers. They went with it. But the truth is, cash is typically the first one. Conventional is the second, FHA, then VA. So if you qualify for conventional or FHA, the truth is, you probably want to go conventional. It'll give you the best shot at getting your deal, your offer looked at by the seller. Hey, and that's how you kind of slice and dice which one you go with.
That led right into that next question. The next question
See how
was
good we are? See how good we are?
PMI, FM, or MIP, right? Is that what they call it?
Yeah, it's all the same at the end of the day. It's mortgage insurance. It's a monthly fee that you pay that doesn't help you any. A bad way to say it is that it's for the bank. It's not for you. So I mean, but it's a necessary. I don't think it's bad because if you easiest way to get rid of it, put 20% down and have perfect credit. Yep. Now, a lot of people say, Hush, I don't have 20% down. Okay, then it's not bad. Mortgage insurance lets you buy a home with less than 20% down. Yes. So you tell me how bad it is. I think mortgage insurance is awesome. People make such a big deal like it's terrible, it's terrible, it's terrible. Okay, then come up with 20%. I'll never talk about it. And they say, well, I don't have it. So, I mean, it's mortgage insurance is a good thing. It helps you get the house. It helps you get the loan.
Well, I sent out some questions to my Facebook followers 2 weeks ago, and I'm going to start asking some of their questions.
Can we call this the rapid fire session?
I think so.
Is that what they usually call it?
Yeah, I think it is. The first question comes from Sarah. What's the difference between being pre-approved and pre-qualified?
Difference between a pre-approval and pre-qualification. Generally speaking, pre-qualifications are you had a conversation, generally. Pre-approval is you went in for the full thing. You got your credit pulled, you turned over your documents, you got everything reviewed, and preliminarily it looks like you're going to get the loan. So there's no question a pre-approval is what you need to have to go make an offer. It's really what you want. I can have a conversation with anybody, and in 5 minutes I can give you a really good idea. And 99% of the loan officers who are licensed, who've done this for a time, they can do the same thing too. One conversation, you can get a good idea if you qualify. That's pre-qualification. Pre-approval means you went the whole way. Credit was pulled, debt, assets and income were collected and everything. You went through the process. So pre-approval is what sellers want. It's what agents want to make an offer.
My next question is how much of that process can be done before they even make the offer? Like how far can they go down the road?
All of it. Like the whole process. Like for example here, if you want to get pre-approved right now, I could pull your credit in 5 minutes. Give me your name, social, date of birth, home address. Boom, I got the credit pulled. Then I'm going to email you access to a portal that we have for your W-2s, pay stubs, tax returns, and bank statements. If you upload those things today, by tomorrow morning, you're pre-approved. Congratulations. And we can have it done within 12. I mean, you're talking it could be done within hours. Turn over your documents. Now, a lot of people will say, Hesh, I can't find my tax returns. I don't know where my pay stubs are. I don't have it. Okay. If
That
it takes
takes
you 3 weeks to send me your pay stubs, well, then the pre-approval could take 3 weeks. Be ready to go. Know where your taxes are. Which, by the way, another thing is, we're talking about affordability today more than anything. We don't want to go back into the mess we were in 10, 15 years ago with the mortgage crisis and all the rest of it. Part of it is being financially solid with how you do things. Every single person should know where your pay stubs are, know what's on your tax returns. You might use an accountant, but what are they claiming for you? How much income are you making? A lot of people don't. They're like, "Gosh, I don't follow any of it." It's your life, man. It's your finances. So it helps you all across the board. But if you have your stuff ready, it'll turn over quickly.
Okay, and you definitely want to have that in your hand before you make an offer on a house. That's for sure. The next question comes from Larry. I pre-approved for an FHA loan. Can I skip the home inspection because FHA is going to do an inspection?
Aha! I hate that question. It's the most hated question, right? Okay.
Yeah.
FHA does not do an inspection. VA does not do an inspection. Conventional, no loan does an inspection. No loan requires an inspection. FHA does not do any kind of inspection. You should not forego your home inspection, even though VA, USDA, conventional, FHA, none of them require an inspection. But there's actually a document you'll sign in every loan application that says, for your protection, get a home inspection. You don't have to get a home inspection, but holy Toledo, are you playing with fire, man? You are. I can get 22 years of doing this job. I can give you multiple stories of, I can give you the one story, the one police officer I know buys a house, no inspection, the whole 9 yards. The plumbing, it leaks like a week later, plumbing's all just leaking the whole 9 yards. And and he didn't get the utilities turned on or checked. Conventional does not require the utilities to be on for the appraisal or for the loan, and he didn't get them checked. He would have gotten a home inspection. The inspector said, "You got to get that stuff on," and would have discovered it. I give you 1,000 stories. Basements flooding a week after, broken drain tile in the yard. You get a home inspection. It is the best $300 you will ever spend in your life.
400
or 400. I was gonna say 400, 500.
No, but you're dead right.
It's
You're dead right.
there,
You're
man.
not gonna buy a house. You're not gonna spend $200,000 and forego 400.
The largest investment of your life. Yeah.
There's a way to do it too. You don't want to scare the seller that they're going to come back and get nickel and dime. So basically, what you're looking for is the house is safe. Everything is in the right place. You're not buying a house with a bad foundation, that kind of thing. So don't worry about getting a home inspection and it's only this crazy market where people are starting to submit offers with zero contingencies.
It's a tough market, man. Yeah.
It is.
It's competitive. Super competitive. A lot of people doing a lot of crazy things.
Yep.
But again, stick to the thing is like, this was the problem back in like 2004, 5, 6. I've done loans for 22 years. Is that people would say, like, I want the house, I want the loan, whatever. And I'd show them the loan. Hey, this is the loan. Here's the interest rate. This is the payment. Can you afford it? Yeah. And they don't think about it. They just sign and go, right? The same thing's happening today to an extent. When you're waiving appraisals and doing all this other stuff, your urge to buy is so bad. Sometimes I always tell people, renting is not always bad and owning is not always good. Patience is a virtue. I know it's difficult. I get it. I understand it. But sometimes waiting on the sidelines for a year or two, if you're doing things that you probably shouldn't be doing, it's a better idea, better thought process.
On that, so when we sell a house FHA, sometimes we get a requirement to get rid of some chip paint.
Mm-hmm.
So he didn't do an inspection. He just ran across that chip paint or whatever the case is. Is that how?
The appraiser does a visual. I don't even like using the word inspection in the same sentence as appraisal, but they just do a visual walkthrough of the house. And if they see chipped and peeling paint, that's a potential health issue. If the house was built before 1978, right, there could be lead in it.
Lead in there.
So the appraisers just do a visual walkthrough. I hate saying visual inspection because then it gives you the thought process. They have a magnifying glass. They're there for 15 minutes.
Okay.
They visually look at stuff. If there's stuff glaring out there, they'll call it out. But they'll do the same thing conventionally. I can show you conventional appraisals where they call that chipped and peeling paint. That's a health issue, not an FHA thing.
The other side of it too is now will that appraiser have to come back out once the
100%. If there's repairs listed and the repairs have to be done, when the appraiser goes back out, there's a re-inspection fee, typically like $150 to $200 to re-inspect. And people say, "Ash, the appraiser's, just doing it to get money." No, I think they're pretty busy right now. I don't think they need reinspection money.
Yeah.
We could argue that all day long.
Amen. Okay. Next one from Peter says, I have student loans that are in forbearance because of COVID-19. Can I still qualify for a mortgage?
1,000%. So COVID forbearance. So all federal student loans they put in COVID forbearance. I want to say it's until near the end of the year almost, but 100% you can qualify just because they're in COVID forbearance. We have a default number we use to calculate a projected payment to go into the debt ratio for qualifying. But at the end of the day, that's all day long, no problems. I've got people pulling them out of COVID forbearance, going into the income-based repayment plan so I can do their loans. As a matter of fact, I have one right now. Come to think of it off the top of my head.
Oh, well,
Yeah, you can pull it out. You can pull it
fantastic.
out of COVID forbearance. You can pull it out. You don't have to pull it out either. It's totally your choice.
You can leave it in there.
Leave it in there.
Will that debt, though, be included in their debt to income ratio?
We have a default number, yeah. It's
Okay.
like 0.5% to 1% to calculate.
Fantastic. Well, those are the questions that I had, and I appreciate your time. Hess has a lot of educational videos on his website at www.libertyhomemortgage.org/video tips. Hess does mortgages in 38 states, and there's a lot of things that come down when I'm dealing with a client, because buying a house is such an emotional time. There's a lot of things that his hands are tied. So it's not like he's making up these rules as he goes along.
Even though people like to think that.
So I want you to reach out to him if you have any questions about getting pre-approved. Please feel free to reach out to me if you have any real estate related questions, and reach out to him if you have any mortgage related questions. We'll be happy to answer them. And as always, if you're not watching this video on my webpage, please go to the video blog and sign up so you don't miss any content. There again, it's Dennis Rath, and he's
Khash Saghafi.
Thanks for watching, and have a great day.